righty. Welcome to this Eagle City Multifamily Apartment Show, where we talk all things apartments and commercial real estate. And today we have an amazing guest, Steffany Boldrini, and I will be sharing my screen for just a moment to get some introductions on the way, and we'll be right on the way. Recording. Here we go. A little bit about our topic this evening is state of commercial real estate, and it's an interactive show where we're talking and answering questions. And this meeting is not financial advice or legal advice. It's simply professionals sharing what we do. A little bit about your host. Herb Culp is my name, based out of the Dallas area. Also, part of the Eagle City family is Nikki and Dr. Sanjeev Mall and Asif Kumar. And a little bit about what we do here at Eagle City Multifamily. We purchase and operate apartments, and we bring investors in, like you and I, individuals, into experience better than average returns in the high growth markets like the DFW area and some other markets as well. And next week's featured speaker is Paul Peebles from Old Capital Lending. So he'll be giving us lender updates. And without further ado, I will introduce our very special guest today. Steffany Boldrini is a principal at Monte Carlo Real Estate Investments, a firm that focuses on self-storage investing. She also hosts a commercial real estate investing from A to Z podcast, named one of the best commercial real estate investing podcasts by Business Insider. Originally from Brazil, she moved to Silicon Valley at age 18 after a successful career in tech sales. She decided to become a real estate investor after receiving inspiration from successful investors in the area. She has over 5 years of experience in the industry and a track record of successful investments in a range of commercial properties, including self-storage, car washes, and short-term rentals. So with that, Steffany, I will stop sharing my screen and tell us a little bit about yourself and what interested you about commercial real estate.
Yeah, thank you so much for having me, Herb. I appreciate it. Yeah, I was in tech sales for a while and started investing in startups just because I was in Silicon Valley at the time as an angel investor, and very quickly realized that real estate is a much better, safer, in many different ways, form of investing, and decided to learn everything that I could from a friend of mine that was a real estate investor. And yeah, I decided to jump right in because, once you are an entrepreneur, you're always an entrepreneur. I was an entrepreneur before that. So yeah, it's been a wonderful ride, and decided to focus on self-storage because it does well in both good economic times and bad economic times. So
yeah,
that's
I agree. It's a good investment through the ups and downs, right, in economy.
Mm-hmm. Yes. When the economy is doing well, people buy more, keep more, and don't really look at expenses that much. And when the economy is not doing well, they downsize. So they go from a 3-bedroom to a 2-bedroom home, and therefore they have to get a storage, which is a whole lot cheaper than renting a bigger home. So that is why I decided to pick this asset class. For me, multifamily is too many moving parts for my personal goals, and I really enjoy self-storage.
Awesome. I hear a lot of good things about self-storage. And tell us a little bit more about what you do.
Yes. So I've been doing this for almost 6 years full time, and have purchased my own investments. And most recently, we raised our first syndication for 3 self-storage facilities. So right now we're starting to get into the syndication business, where we're, at some point we all run out of money to invest in our own deals. So we're partnering up with people that believe in storage and believe in the team. And it's been a wonderful ride to get this very first syndication done.
Wow, that's what we do in apartments is syndications as well. It's a private offering, right? And
Yes.
yes, where we can, be SEC qualified and take investments from individuals, right?
Yeah, exactly. It's a way to grow. So at some point, if you have deals, people have money that they need to put into deals, but they don't have time to find them or the expertise. They have a full-time job. So syndications is the perfect way for people that want to invest passively in real estate, and also, keep their job. So keep doing what they love to do while we go out there, hunt for deals and operate the deals and negotiate and do the due diligence and everything in between.
That's amazing. Right. And another thing about syndications, you could probably tell us more about this, is people with retirement accounts can invest in these syndications as well, right?
Yeah, yeah, that is correct.
Yeah.
Yeah.
Tell us.
I'm not a CPA, so you should always contact your CPA for all the, legal details, and an attorney to also review the PPM. I always tell people to really make sure that, you do your due diligence on the operator, because right now we are seeing operators not do well, right? Because of the mortgage rates. They had 3, 5, 7 year fixed rates, and they were being very bold, in my opinion, to buy multifamily at 3.5 to 4% cap rates. And so right now their interest rates are doubling. And if you weren't able to maintain or increase rent and decrease costs in order to pay for this, people are getting in trouble. So I really encourage people to find other people that know the operator, talk to them, see how their experience has been with them, before making an investment.
I agree. That's very important to know the people you're investing with. Right. That's
Yeah,
important. And tell us a little more about what you just explained something. It slipped my mind right for a moment. Okay, so
interest rates going up.
yes. Explain what you were talking about. Right? Was that variable rate loans, or what were you talking about there? Explain a little more, please.
Sure. So commercial loans are different than residential. They're typically 3, 5, 7 year fixed, sometimes 10 year fixed. So a lot of people got very low rates, 3.5, 4% interest rates, because they have been going down for a very, very long time. So they did that, and the prices that people were paying, for certain asset classes was, I don't know how they were making it work, to be honest, at 3.5, 4% cap rates. So that always was boggled my mind. And so now these interest rates are doubling, and you need to find the money to pay for that within your property, right? So if you did not increase rent, if you did not add value, if you did not decrease expenses, it's going to be very hard to find the money to pay for that extra interest rate, interest on
Right.
property.
I see a lot of operators doing that as well, having to come up with capital
Yeah.
to pay for the higher interest rate, because that can be a large dollar amount on large deals, right? Some of these deals are 20 million, 50 million and larger too on these apartments. And
Yeah.
yes, I agree. It's very important to have either fixed rate loans or something in place to mitigate those risks of rising interest rates. Personally, I feel like over the next year or so, it may start going down, but at least level out here in the next on the interest rate increases. What are your thoughts on that?
I hope so. The Fed has been saying that they're stabilizing it for this entire year, but they have been increasing every time they meet. So we're at 9.25% for certain loans for development right now. So that it makes it very difficult. And I know that in some states the insurance has gone up significantly, 100%, if not way more than that, like Florida and Texas. So you need to account for that as well.
Oh, it sure had, right? Especially along the coast, it's really, really gone up drastically, right?
Yeah.
It's going in Dallas too, some. So, but we want to figure for that and underwrite for that, right? On the new deals.
Yeah, yeah, ideally, yes. But we cannot forget what it was like, what it felt like in 2020, 2021, when everybody was buying at 3.5% and 4% cap rates, and people like me I was not buying because I did not know how they were making it work, right? So you need to make your own decision on how conservative you're going to be, right? Because it's very easy to think that right now will never end, or 2020 would never end, 2019 would never end, those prices. So we have to we have to remember that things can change, account for that as much as possible, and maybe diversify or find other ways to add value to a property. So you need to know the math really, really well.
Right, I agree. And anyone on the show live here, please post your questions in the chat. There, you want to mute yourself there? Yeah, post your question in the chat, or simply raise your hand or unmute yourself, and you're welcome to ask questions as we go through this. And but yeah, Steffany, would you mind explaining a little bit more about cap rates and how they work and how they're different from residential pricing, right?
Well, single family, single family depends on where you buy, right? So let's say in where I was in San Francisco area, you would never be positive on your rent based on the property value. You would always be on the red, and however, you would be on the positive on the property value increase. So you will get equity very quickly. Other states or cities or markets, you are able to get cash flow, but the value of the property is not going to go up that much. So that's residential. And commercial is the same in terms of it varies by market, of course. Cap rate is basically the net operating income divided by the price of the property. So the smaller the cap rate, the most expensive the property. So it basically means if you paid 100% cash for that property, what is the percent that you would be making? So let's say you paid $1 million and a 4% cap rate, you'll be making 4% per year. So because we have loans that most investors do take for commercial properties, you need to take into consideration the mortgage payment as well. And so when cap rates go up, they go up along with interest rates. So right now interest rates are going up, and therefore cap rates are going up because it's very hard to find money left to pay for the extra rise in interest rate. I hope that makes sense. Cap rates, it takes a bit of time to completely understand the ins and outs of it, but that's the gist of it.
So basically your residential is priced based on the comparables around the property you're selling or evaluating.
Right.
Commercial is determined by your net operating income, right? Just like you said that, yeah. So it's evaluated differently, right? Than residential.
Exactly. Exactly.
Yeah.
So yeah, you get a discount when the cap rates go up, you get a discount on the price. And I did all the calculation on how much of a discount you get versus how much more you need to pay for your interest for your mortgage. And it is worth it for the vast majority of the time to get a discount on the value of the property and pay a higher interest rate for hopefully a short period of time.
Yeah. So Steffany, where do you see the near term commercial real estate going? Like, are you seeing better deals, or are you seeing people having to let go of properties because they can't keep up, like on interest rate increases and things, or what are you seeing?
Yeah, like any other form of real estate, it depends on the market, of course. So in San Francisco, a lot of offices are being sold for an 80% discount, but not in Miami. So
Right.
it really depends on the market. So it depends on the asset class as well, right? So industrial is doing really, really, really well nowadays. For self-storage, we're seeing a little bit of an increase on the cap rate, but sellers are still a little unrealistic. So we hope that they will become more realistic as the time goes by. And also, again, a lot of people will have their mortgages coming up for refinance. So those will be the people that will pretty much have to sell if they cannot afford.
I agree. That's what we're seeing. Our seller brokers are bringing deals to us that have a interest rate, the cap, what am I thinking of? The cap interest, the cap insurance running out, and so they're either having to buy another cap rate, buy another cap interest rate.
Rate cap.
Rate cap. Thank you, Charles. They're having to buy another one at a higher rate at a higher cost, right? And some of those cost a lot of money, a lot more, like millions more on some of these deals. And so they either have to come up with money or do a capital call, which is coming up with money from the investors to keep the deal floating, or sell the deal.
Yeah.
And so some people are selling deals on that for that reason.
Yeah, it's I don't know. I've been a little disappointed that the banks get saved, but not entrepreneurs and investors like us. We don't get saved by the government, right?
I agree. That would be nice.
Yeah, so open up a bank.
Right. Yeah, that's good. Anyone on the call have comments or questions? Something you would like to talk about while Steffany is on?
Is it unfair to compare what storage looks like versus multifamily? I mean, I understand multifamily fairly well, but I don't really know how to talk about storage. We talk about units. Do you all talk about units, or do you talk about square foot?
Both. We do talk about units and price per square foot as well. Very similar analysis. The only difference is how often they come to the storage versus how often they go to a sleep at home.
Sure.
and how many more moving parts there are. Of course, we don't have long-term leases, so we do have to keep a flow of people sometimes coming in and renting units on a regular basis. However, it's a very stable asset with not too many moving parts. It's easy to not have a property manager on sites nowadays with technology. So I have a very tiny presentation on self-storage if you guys wanted to take a look at it. But a very, very similar analysis and the way that you add value, not necessarily by remodeling the units in storage compared to multifamily, but more on the adding more units, increasing rent, and decreasing costs.
Okay, thank you.
Of course.
Yeah, I have lots of friends that do self-storage, just interested in it. So
yeah. And sometimes I struggle with, should I diversify into industrial, because industrial is doing really well right now. So it's a question to ponder for everybody, because what if a market gets oversaturated, or what if an asset class becomes so incredibly popular that it becomes difficult to find deals? So it's a question that I have not been able to answer yet, but yeah, self-storage is a great asset class.
yeah, it sounds like it. Yeah, so Mary Lou says, great to learn about new asset classes. She's another live on call. Mary, you're welcome to get off of mute and make comments or ask questions if you like. We're all here to help each other, right? So yeah, so one thing that we're in the B and C class in apartments. So apartments go by A, B, C, D class.
Yeah.
A being the newest, the most amenities, right? And then B and C is typically where the working class live, right? And so if someone can't afford a home, they usually drop back to apartments, right? And if they can't, they're A class, typically they'll drop back to a B or C class, right? And so that makes it more recession, right?
Yeah.
People always need a place to live, and we're becoming a renter nation, I believe. And there's less and less homeowners, right? And more renters by some of the statistics that we see. So
That's
yeah.
Wonderful. Yeah, that's wonderful. Very safe asset class for sure. I also don't know much about multifamily, but I know it is pretty safe.
Yeah. If you have good operators and good property managers, right, that's one of our biggest things. We use third-party property managers on our properties, so it's a really big deal. The property managers are a really big deal.
Definitely.
I'm curious, in self-storage, do you self-manage, or do you have third-party management in place?
We self-manage. We're going to be building our first facility from the ground up. So for that one, it's still going to be determined if we're going to be self-managing, especially during the lease-up period, which can take a couple of years to fully complete. But other than that, we do fully self-manage.
Okay, and you say no long-term rentals, so like, is it month by month, or do you have year contracts or anything?
The leases are month to month. Most people do stay for at least a year on average, give and take. A lot of people stay for longer. They visit their facilities on average 3 to 4 times a year. It depends if they're a business or not, if they're storing their business items there, or if it's more grandparents' items that nobody has the courage to give up. But yeah, very little moving parts, and The only thing is that sometimes you have to continuously lease up units that people vacate over time. So it's not, it really, I always like to tell people, what is important to you? Is time more important to you? Is money more important to you? Or is something in between, right? So if it's time, you want to be in the retail, office, industrial space because you just sign one lease and that's pretty much it. Self-storage is something in between. And I believe multifamily is more hands-on alongside with short-term rentals. Probably short-term rentals is more hands-on than multifamily, but that is what I really think everybody should think about on what is more important to them, what their priorities are.
Yeah, that multifamily is more scalable, right? We can have hundreds of houses basically on one address, right? Basically, several buildings, right? Hundreds of units on one location. So it's scalable. In other words, you can do more with less people, I guess you would say, or less transportation time, like managing properties, right?
Correct. Yeah.
That's a really good aspect on multifamily.
Yeah.
So tell me a little more about, you were talking about on self-storage. So on apartments, it's mostly a year leases, right? Little more than the short-term real estate, right? So it's usually a year, sometimes 6 months, sometimes longer, but most everything is a year lease. And yeah, there it is. It's a whole lot less hands-on than residential, right? The individual single family. But you're right, it's probably a lot more involved than self-storage, right? For several reasons. Yeah, and one of the reasons, like CapEx. So for example, apartment we have right now, the last one we acquired was a 128 unit deal, and we're doing CapEx, right? We have a third party property manager, and the property manager is taking care of the day-to-day, right? There's a leasing agent and two on full-time property managers, people on site. And so they manage those people, right? Those three on site, right? And but we're taking care of the CapEx. So there's more than one of us general partners, and so we're managing the CapEx, like finding the contractors, hiring them to do the capital expenditures. That's like time improvements for those listening that might not be familiar with the term CapEx. Yeah, so we painted the exterior, made it look a new look on the property. We added to the the amenities, and we're continuing to upgrade the units as well. So that it does take some more hands-on, but there are third-party management companies that will handle that for you too.
Yeah.
Had that totally handled, but we had the brain power and the manpower to handle that. So, and the property management people were good with that. So yeah, that's a little bit about what we do.
Yeah. Yeah, I think all asset classes have property management companies that are there to support them.
Yeah. All right. So any more questions? Usually I'll ask our guest speaker what some of your hobbies are before we wrap this up.
I love good food and spending time with good people, friends, family, hiking, taking my dog for a walk, traveling, all the good stuff in life I like.
I love it. That's good.
Yes.
By the way, I'm 4 days into a water only fast, so I really want some food right now.
Oh my gosh. I've done 3. It's really hard. Congratulations. How long are you going to go for?
Is 7 days. Yeah. The longest I did was 10 days, but 7 is my target this time. If I make it, if I don't, no worries, right?
That is so healthy. Fasting can cure any disease, apparently. It's incredibly healthy. Congratulations.
Yeah, my son Jared on the call, he's on it as well, and some other friends in the
Wow.
so
Congratulations. The whole family. How did you convince your son to go on?
He's a bodybuilder, health and fitness guy. He's actually my health and fitness coach for
Wow.
everything, and he has some YouTube channels and all that. And he wanted to do it too.
Amazing.
He's his own man, right?
Wow. Great job. Congratulations on raising a smart son at that age. That's amazing.
Yeah, I'm very happy. Yeah, so if are there any more questions before we wrap this up from anyone? If not, we're so excited to have you, Steffany. That was some very great information for our viewers and people out there wanting to learn more about these asset classes. And
Thank you. Thank you so much for having me. Congratulations on doing this on a regular basis, and wishing you a huge amount of success in your future.
well, thank you. All righty. Well, with that, we'll wrap it up. And thank you so much. Have a great evening.
You too. Thank you.